They are at $18 trillion. We are $3.5 trillion. Now, why I'll buy you at 20 times? Right? Anticipate the growth in the revenues. If you take this world as a box, okay, our standard of living is 1/4 of the somebody's standard of living. This domain is getting huge attraction.
Welcome everyone to the second episode of our series called Stocks Pe Charcha. Today I have with us a dear friend and a senior in the industry, CA Chartered Accountant Nag, who's a good friend of mine. And so Nag, how are you doing? And thank you so much for taking out the time for this.
I'm doing great, Abdullah. Thanks a lot, and thanks for inviting me so that we can have this kind of discussions, because this will help us, or for that matter anybody, to at least understand the domain of investments, so that they can optimize their returns and optimize their wealth management framework.
Correct. Right. So you are based in Hyderabad right now, right?
Yeah. Yes.
If you can just in 1 or 2 minutes give a brief background about yourself for the audience, that will be great.
Yeah. So I'm a chartered accountant, qualified in 2012. After that, I worked with Robert Bosch in technology domain, but I am passionate with markets for very long, say even from 2007, 2008. And from then, 2015, I started my CA practice. Alongside, I managed my own fund. So I thought, alongside managing my fund, why not this be turned as a business model? So,
Right.
What is a economical way of doing this? As we discussed before, so I found RIA is one. So I opted to take SEBI Registered Investment Advisor, and from there we started building this business. So we have been doing well for the last 1.5 years.
Fantastic. And how is the investing public in Hyderabad?
Investing public in Hyderabad is a prototype of India. See, we have just 3% active retail investors in India at this moment, when compared with 55% in USA. In India, still people are more tilting towards real estate for tangibility maybe, but liquidity is a concern though. But equities is still a suspicious product for them to invest into. So, but actually things are changing. Okay, we are in the right direction now. Okay, the young youth, even people of 35, 40, and market's doing well. That is going well with the people. So they're coming forward to invest. And first of all, the main change I have seen is people before never used to think that financial planning is a separate exercise and which needs an expert advice, right? Now actually they are coming into a zone where, okay, this has to be outsourced to somebody like us, so that they can leverage their time, their expertise, for that matter, anything. So that's actually a good change.
Right. And I think especially in the last 3-4 years, this change has happened quite a lot, especially post-COVID, right? People have started investing.
See, COVID did what? COVID
accelerated a lot of things.
Exactly, triggered that momentum in the retail domain. Okay, we know that phenomenal increase in demat accounts. Though there is a big, huge crowd who are going with this option trading, okay, which is not actually a good sign. But there are people who wants to invest into to invest for long term and make good money.
Right. I think you mentioned about option trading, which a lot of people are into. Obviously, 99% of the people are going to lose money over there, but a big chunk of that will eventually realize that long-term investing is the way to go, and then they will sort of filter down or trickle down to the investing class.
Yes.
Right.
Option trading is something to do with the adrenaline and nerves, right? That's like an addiction. Okay, you will not get that adventure feeling. Okay, if you are trading or if you are investing into the stocks, right? Because
Correct.
that's a very patient, long-term game.
Correct.
Where options is like you do or die in a day. Okay, that gives the kick. Right?
Uh,
The youth.
People do it for the thrill of it, basically.
Exactly. So that 20, 25, below 30, okay. So they are more tilted towards this zone. Right? I mean, see, that's a pure zero sum game, right? It's a negative sum game, as you know, right? I mean, if you have 10 people in the room, so probably the money will get shared between these guys only, and
Just
a
gets
chunk of
it just gets reshuffled. No one actually. There's no
no one
net gain.
exactly no one creates value there, right? The only
Correct.
value will be your SEBI, your NSE, BSE, okay, your
And the
broker, and your government at the end of the day, right? They are
yes.
the actual value creators. So when it comes to stocks, say for example, okay, I invest in a company, the company utilizes that capital, right? That will get deployed. He will pay salaries to the employees, right? And he
Hmm.
will feed the vendors, right? The
Correct.
customers who buy from this company also will get benefited because they are deriving some value from these guys. And even if you see the small time vendors, okay, around this company, okay, they sell tea, chai, samosa, whatever, even they create value. So there will
They
be
do
no,
that value chain, basically. Yeah.
exactly, that's the value chain, right? So that is
Hmm.
where everybody will win, and we have to be in that zone, right?
Right.
So we have to identify and we have to see actually whether this domain is creating value or not, first case.
Right.
Right? So that's why you have to be in the equities. Okay,
Hmm.
you hold for 6 months or 7 months or 6 years, but you have to be in the equities.
Absolutely. Absolutely. So let's talk about what sort of expectation should a retail investor have, uh, because in India people are very value conscious. मतलब अगर कोई 10 रुपए भी निकालता है, so then they think, what am I getting in return? And even in small items, Indians love to bargain because they love getting value, right? So, how would you explain to somebody who knows nothing about stock market, like why should he invest in the stock market?
Right. Say, for example, let's take Bajaj Finance for that matter.
Yeah.
Right. See, if you see the revenues in 2015, right, they were around 6,000 crores.
Hmm.
Okay, and they're making a profit after tax of around 900 crores, for example. I may not be right exactly, okay, but that's the PAT they have. See, what is a company or what is the value of the company? It's nothing but some multiple into your pattern,
Hmm.
right? To be
Gotcha.
very, very lay, okay. So
Yeah,
meaning
yeah, yeah.
what? Yeah.
Hmm.
I am a Bajaj Finance, okay. I am doing a PAT of 900 crores, okay. Somebody will come and say that, okay, guy, bro, I want to buy you at 20 times, right?
Right.
Right now, why I'll buy you at 20 times, right? The only question here I have as an investor is because I anticipate the growth in the revenues, right?
Right.
Right, because why I have to anticipate the growth in the revenues? Okay, there are two complementaries in India. Okay, one is inflation, right?
Hmm.
Inflation indirectly increases your revenues, right? Another thing
Yeah.
is the demand side, right? See the consumption in India, okay, that's going huge. And this microfinancing, you buy a fridge on loan, okay, right? You buy a gold chain on loan, right? You buy even we buy apparel on loan, right? Okay, so whatever
Right.
it is at the end of the day, right? So this domain is getting huge huge attraction. Now say for example, these guys have utilized that mode, okay, and next if you see now they are making revenues around 60,000 crores, okay, and their PAT is around 10,000 crores, for example.
Hmm.
So why a common man has to invest is the simple reason, right? I buy the company now, okay, at this valuation today, anticipating these valuations go up. Why these valuations have to go up? Because the revenues are going to go up,
Yeah.
right? So you have to invest in a company and see for the valuations to go up, supported by the revenues. Obviously, if the fundamentals go up, I mean, if the fundamentals shine, obviously the valuations will shine. Maybe today or tomorrow. Okay, all these crisis in the middle or crisis on the way. Okay, they are all bubbles, right? I mean, they just go off. Okay, So we have to wait for that. So now what happens? Revenues have gone up by 10 times. Okay, PAT has gone up by 10 times. And now, the PE was 20 then, now it is 30. Even PE got stretched because of the potential that Bajaj Finance shows. Now the stock has gone up by 15, 20 times in 10 years. Right? So we have to have this market awareness. Okay, you need not be so much into our depth. You need not dive into the fundamentals of the company, but you have to understand, at least when you go shop or when you have to see the market trends. Okay, whether are there any listed companies in that space? Okay, whether can we go and buy a chunk of it? Okay, it need not be. I have 1 crore net worth. I need not invest 1 crore on it, right? I mean, so I can again plan it accordingly, and I can just put 1 lakh into it. So surprise may come from any of this 50 crore.
Right. Basically, why a retail investor should be in the market is because he should own a chunk of the economy.
Exactly, correct.
Or a chunk of the economic machine that's driving the economy.
Exactly. So why they have to invest? It's again simple logic, as you know, right? See, we growing at 7% per annum, right? So we have a good benchmark called China.
Right.
They are at $18 trillion GDP.
Right.
We have $3.5 trillion. Right. If you take this world as a box, okay, our standard of living is 1/4 of the somebody's standard of living, for example. Right. Meaning what? If you want to go there, India has got to do a lot of consumption. Meaning what? If we grow at 7% per annum, okay, it's imperative that the corporate revenues are going to grow at 12% per annum for sure.
Of course, yeah.
Right. If the revenues are going at 12% per annum, my valuations are also should grow at 12% per annum. If my revenues are going at 12% per annum, obviously my valuations also will grow at 12 to 15% per annum. If you do a bit more exercise, or if you do a bit more research onto it, if you can get good stocks and stay with them for a very long while and let the compounding come and take the effect, obviously you are going to make 4-5 times in 10 years, and with the dividends coming maintenance free. Right. Unlike real estate, where you have to construct, you have to maintain, you have to do a lot on that part.
Right.
So this simple, exactly as you said, you have to own a part of the economy, which is the best economy in the world.
Yeah, in terms of growth right now, right?
Exactly.